Good morning everyone, and welcome to the PivotBoss pre-market video for Thursday, October 24th, 2019. I am Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. You'll see right here that price is currently trading higher. It's trading above the previous session's close here, which is it finished right on the highs of the day. It's been in a fairly range-bound market right now. Looks like an expanding range developing in the intraday time frame, which means it could be a range-bound day where it just trades back and forth throughout the session with an upward bias. This market continues to lean higher. It continues to be defended at the 8-period average, and every pullback continues to see a responding bounce. So right now everything continues to be pushing higher. It's a trading range day in the intraday time frame with a 10-handle range and 31% of ADR. So we could see further range-bound action, so that would mean you'd like to fade the edges, look to fade new highs, fade new lows with an upward bias. Alright, that's it for the ES. Let's take a look here at the NQ. You'll see that again the NQ and ES are both range-bound for the most part. They are both higher. The NQ again higher above the previous session's close and returning back to 79.50 there. So for the most part, this is a range-bound market with an upward bias as well. This market continues to push higher on a swing basis and is approaching significant resistance, but again, it hasn't really wanted to find acceptance above that FOMC key level, the one I continue to point out, July. But we still have a little bit of room to run to get to that point. We still have about another 30 handles or so. So we could be looking at a continuation toward that zone here pretty soon. Let's take a look now at crude oil. So crude oil has had a pretty significant breakout day in the previous session. The previous session, you'll see right here, right on inventories, price popped and pushed through that 55 level and was able to hold 54.90 the rest of the day. And not only that, eventually broke to the upside and saw a steady expansion throughout the session and eventually topped out at 56. That's a pretty significant breakout. We talked about how compressed price was yesterday pre-market, and this is a pretty significant breakout to the upside. Now, one thing that we constantly look for after a trend day up is you watch to see if the previous session's high or close is offered. If it is, then there could be a return back toward the midpoint. That's about 54.85. So any pullback to about 54.85 to 55 even could be a great buying opportunity for another push higher. See how high it'll go here on this breakout. Now, one thing to keep in mind, again, seasonality is pretty bearish. It tends to be very bearish at this time of year. And any pop here with rejection at some point could be a great selling opportunity for a finish to the year. So keep that in mind. Alright, taking a look now at gold futures, which you'll see here. Pop that up. Gold continues to trade in an increasingly more narrow range. If you look at the past few days here, it was 8-point day, an 8-point day. This one started out as an 8-point day, eventually expanded a little bit more. This was about 8 points. And right now, we're at 7 points. 7 points of range. So that is less than the previous session's range and is also somehow inside the previous session's range. So it's coiled up tremendously, and it's likely going flat and sideways into next week's FOMC meeting and interest rate decision. So again, this one I'm not having too much confidence in major price action, but there could be a short-term push to the upside. If it can get through 1500, for example, there could be a push of about 20 handles. A failure there, again, just kind of brings it back down. It's just been trading in a modest range, but watch 1500 for signs that it might get a move to the upside. Alright, that is it for now. We'll see how this plays out the rest of the session. Good luck, trade well, and I'll see you in the trading room. Take care.